Hello and welcome. You're watching Wealth Conversation. Domestic markets have seen a good run up with the benchmarks gaining over 100% since March 2020 and over 40% in last 1 year. India ranks first among Asian regional peers on year-to-date performance as far as the dollar returns are concerned. But as we all are witnessing, there's a bit of fatigue in the markets. The pace at which the markets have been moving is slowly coming down, and the potential returns are expected to be on the lower side going forward, with concerns over inflation, high energy cost, peak margins, and stimulus withdrawal gaining concerns. So, is this the right time to really diversify your portfolio and look at markets that promise better growth and returns? The Nippon India Taiwan Equity Fund offers investors an opportunity to invest in the markets that's focused on completely unique industry. Yes, Taiwan is the unmatched leader of the global semiconductor industry, accounting for more than 60% of the share in global market. So now you have an idea on how big is the opportunity for the country like Taiwan to flourish. Nippon India Taiwan Equity Fund is an open-ended equity scheme following Taiwan-focused theme. The NFO opened on 22nd of November and closes on 6th of December 2021. To talk on Nippon India Taiwan Equity Fund, joining me now is Mr. Rajesh Jayaraman, Deputy Product Head, Nippon India Mutual Fund. Welcome, Rajesh.
Thank you, Geetu.
Rajesh, talking about Taiwan, I mean, we all know about the semiconductor issue that's going on and the kind of market Taiwan is. So what makes Taiwan so attractive vis-a-vis other emerging markets like China, Brazil, South Korea?
Sure. Geetu, it's a very, very different market in terms of technology. See, what happens is you are absolutely right. Today, possibly Taiwan is more in news because of shortage of semiconductors, which is actually called as the new oil from a technology perspective. But what one might miss in this whole hype around semiconductor shortage is the advanced technology which Taiwan possesses, and that differentiates this market from a lot of other players who are also relatively large within the semiconductor space. But Taiwan has a dominant share, not only from a semiconductor space, but within that, in the advanced semiconductor kind of area, is one of the core strengths. In fact, as an economy, if you look at this, and most of us here in India would recollect the 80s and 90s when we used to have our television panels, the initial computer panels, all of them having a made in Taiwan tag. So very clearly, electronics and semiconductors are an area which is of core competence when it comes to Taiwan. In fact, so much so, the new age technology, in fact, all of us have seen how technology is influencing our lives today. So the way we are conversing today to our smartphone gadgets, to learn from home, to work from home, the entire spectrum of our life, in fact, food tech, fintech, everything is part of our life. So tech is driving our life in a more than usual manner as what we were used to in the past. So what is fueling all this? There is a intelligent system which is called the chips or the smart semiconductors, which is driving the entire thing, and within which the new age technology, which is going forward to influence us more, like 5Gs, EVs, artificial intelligence of the world, they would need even higher end chips, which just to give an example. So in today's world, the smaller chips you make, it goes into the higher and more complex kind of new age technology. So today in the world, there are only 2 countries which are able to produce chips of sizes of 10 nanometers and smaller. And Taiwan has a very big dominant share within that. So we think not only the technology, not only the semiconductor leadership, but even within that, more specifically, one of the few countries and geographies capable of manufacturing advanced chipsets differentiate this particular country.
Okay. Do you see accelerated pace of digitization bringing further opportunities for Taiwan?
Absolutely, absolutely. So not only is the accelerated pace of digitization, because therein possibly there could be a very concern in the mind that some bit of this demand requirements was also you could say exaggerated by the supply shortage, supply challenges, which most of us had to see through over the last year or so. So the question could be, what happens if things start to normalize, which we're already seeing in the last couple of quarters, and if that continues, would this demand even continue? from a Taiwan's perspective. So, which is where I wanted to explain, and I shared in the earlier answer that the manufacturing of some of the advanced kind of variety of chips, which today a lot of other geographies in the world have a long way to go, puts Taiwan in a very unique space. And all of us know technology is changing; it is getting more and more advanced. So you will have cloud computing, you will have AI, you will have EVs. In fact, today we know how defense itself is largely working on a lot of support coming in from chipset. So everything is going to the next level. 5G, obviously, we are expecting the rollout to happen soon. So the demand will only keep growing for this particular commodity until unless we get to a situation where we can work on a chipless mode.
All right. So, what is the process? Give us some insight into the investment philosophy and strategy around Nippon India Taiwan Equity Fund. What is your approach like?
Got it. So the idea here is to try and give a product to our Indian investors. They can try and capture some of these possibilities on the technology manufacturing side, because we have large players who are more of end product providers, but here we are trying to give a different, unique market as an opportunity to for our investors to try and capitalize on. So the attempt here is to try and look at those set of businesses which are leaders. And this doesn't necessarily mean only the electronics, stroke, semiconductor, stroke technology space. It could be some of the other areas also where Taiwan has a relatively better strength or unique positioning. We will try and capture that within the portfolios. But needless to say, the electronic space and the semiconductor space would have a dominant allocation within the portfolio. Attempt is to try and look at companies which have very strong market share because of their differentiated technology, something we believe creates a kind of moat for them. In the sense, it will take long time before the other competitors are able to catch up. Also, their demand for their products should be reasonably strong and varied, so that the demand visibility in those set of businesses can be there for a reasonably long period of time. Also, entry barriers typically in the areas which they operate in should be reasonably high, so that their market share, their profit share, which they dominate today, that can continue for a reasonable period of time. So the idea is to try and look at all these aspects within the Taiwan as a geography.
Mhm. Rajesh, has China's fallout and the recent developments that we are seeing in China really helped the countries like Taiwan?
To some extent, yes. So what has happened with the one of the telecom manufacturer and the US-led worries or concerns on that, and post which there are a few sanctions. A lot of countries didn't trade in sensitive areas with China. So that also, in a way, helped China, helped Taiwan, because some of the business shifts would have happened even from that particular aspect. But that's only a small part. As I said, technology itself differentiate this particular markets and brings to the fore their dominance. So while the China part could have been a small thing, but if you look at the overall dominance, which you also mentioned, 52% of the global manufacturing of semiconductor happens out of Taiwan. And one more interesting fact about Taiwan, it's just not the manufacturing part. They are present across the entire supply chain when it comes to the semiconductor space. So this country is either number one or number two across different facets, like manufacturing or fabrication, as it is called, uh, or the assembly, the testing, the packaging, all these areas, there is a significant dominance. In fact, design is one area where probably Taiwan was not as big in the past. But as recently we've been seeing the news, we hear about MediaTek, which is a Taiwan domicile company, which has become the largest smartphone system on a chip maker. So it tells you the growing stature of this particular country when it comes to various facets of the semiconductor space.
What is the process that you follow? You get the direct exposure to Taiwan equities, or do you have a tie-up in place to understand Taiwan markets well?
Right. Absolutely. So our expertise is limited to India largely. So what we have done is we have entered into a tie-up with at this side, who are one of the largest asset managers out of Taiwan, a company with 2 decades plus of experience tracking Taiwanese markets. So we will largely rely on their expertise and advisory support.
So, what will be the criteria on which companies and stocks will be assessed?
So the criteria which I mentioned earlier. So typically looking at those set of businesses which have strong earnings profile, which have a strong margin growth visibility going forward. and also strong visibility in terms of demand of the product categories they manufacture. Apart from that, we've taken adequate care when it comes to the risk management requirements here. So this fund will not invest more than 10% into a single stock. So we could see adequate diversification. Why I mentioned that specifically is because in Taiwan, because of the nature of the market and the nature of the market capitalization which is there on the equity side, one of the largest companies there enjoys a 30% kind of weightage in the benchmark indices based on market capitalization. So we will avoid all that kind of allocation and have a very diversified kind of profile. Even within the semiconductor space, well, as I said, while the proportion of allocation to semiconductors could be relatively high, it will cover various aspects like manufacturing, assembly, testing, packaging. So all the different opportunities would be captured even within that space.
Mhm. Is any forex risk associated with this kind of a fund?
Yes, forex risk would be there with any kind of international fund. But if you look at Taiwan, just for a comparison, maybe United States, is that what you could see is typically Taiwan is a perennially current account surplus kind of country. Their exports are more than their imports. So they have seen the currency actually appreciating vis-a-vis INR, just like what we saw between INR and USD over the last decade and so. Also, if you look at the inflation profile of this country, this has been hovering around one quarter, 1.5 kind of range. Compare that to our country. We know our inflation is likely to remain much higher compared to what Taiwan is. In fact, a lot of other characteristics of this country, even though Taiwan is clubbed as an emerging market economy, actually resembles or it's very close to a developed market kind of economy. So our own belief is theoretically, at least for at least a reasonable period of time, currency should not be detrimental. See, we don't know whether INR will continue to depreciate, but historically, if you look at the last decade, we have seen INR actually depreciate anywhere between 50 to 55% over the last 10 years. So we don't think currency will be detrimental here at least.
Mhm. Are there any other risks associated with the fund that one needs to keep in mind before investing?
Yeah, so there are a couple of things which I need to highlight. I would not really call it risk. There is always the unknown which is there, and one of them is the geopolitical part, because China, to some extent, believes that Taiwan is part of their own country, and in fact, recently some of the policymakers there have called for reunification by 2025. So there's a bit of apprehension among a few investors whether this could lead to an increased kind of diplomatic tussle between the two countries. Well, that is difficult to predict. What we know is China also depends quite a bit on Taiwan when it comes to the technological know-how. So China also has reasonably large production capabilities on the semiconductor space, but the technology superiority of Taiwan exists. In fact, Taiwan and China have a fairly large trading relationship. For Taiwan, China is the largest trading partner. 30% of 35% of the exports out of Taiwan actually happen into China. So there are a lot of economic interest linked between these two countries, and we believe probably given that there could be a more diplomatic way of sorting out challenges. Also, if you look at from a global perspective, I did mention that 52% of the global semiconductors or chips actually get supplied from Taiwan. So a lot of countries, including the most developed nations of the world, like US, have a very big dependency on Taiwan. So any kind of instability there would impact the entire thing. And we know how today the supply shortages have been hurting on the chip side. So God forbid if something untoward happens to Taiwan, that could lead to a big challenge, even from a world point of view, from a global point of view. So we believe the entire world at large would want a more stable kind of environment at Taiwan. And so it will not be a big concern, yes, but that will be in the news, and naturally investors will have to take it in their stride. And we believe Taiwan has faced the challenges over the last many decades now, and they have come through, and they have actually grown despite all these challenges. The second thing could be that, again, a question which would be there in people's mind is, would the reshoring and offshoring, which a lot of countries today are trying to do in terms of building capabilities or self-reliance as far as the chips part is concerned or the semiconductor part is concerned, would that impact Taiwan's unique positioning? It may not lead to any immediate change, is what we believe, because the technology itself, which comes out of Taiwan, is fairly advanced, not something which is easily replicable. In fact, if you look at setting up of a foundry or a manufacturing unit, takes quite a bit of time, 2-3 years, or even 4 years in some cases, and quite a bit of investments. Apart from the important factor that you need skilled manpower, which may not be in abundance in a lot of other geographies. So even from that count, we believe Taiwan has created a mode or a unique advantage for it.
Mhm. Ideally, what should be the exposure to global funds in one's portfolio, and why is it required as our own markets have been doing well?
Right. That's an absolute valid question. I'm sure a lot of investors would be even thinking that. The fact is, what we've seen even over the last decade and more is markets tend to have its own set of phases depending upon various other external factors. Diversification is more propounded because we believe you can manage your risk in a much better manner. For instance, 2018 to 20 period, large part of 2020, what we would have seen is India being a relative underperformer across some of the developed markets of the world. So that point of time, if people are exposed to some of these developed markets, their return profile could have been better managed. The downside risk could have been protected in a better manner. So these kind of phases keep happening on and off. All of us know equity markets tend to be volatile. So diversification, not only across asset classes, but even across geographies, could be a very interesting thing. Secondly, Taiwan, as I mentioned, offers a very unique kind of play on a very niche segment, the growth of which looks fairly well placed in the technology age which we are living in. So that again gives access to some of our investors to participate in a unique thing which probably today is not available from an Indian perspective. When it comes to diversification into international space, 10 to 15% of one's portfolio seems to be a good number. Obviously, there is no specific rule, sacrosanct number here, but 10 to 15% seems to be a prudent way of allocating within one's portfolio in this particular area.
Mhm. Thank you, Rajesh, for your time and giving us an insight into Nippon India Taiwan Equity Fund. Thank you very much.
Thank you. My pleasure.